What's up, everybody? It is Monday, October 25th. I hope you had a nice weekend. New record highs in the S&P and the Dow. Nasdaq's creeping up. Still looking to get to Dow 36,000. Nasdaq ultimately will make a new high. Tesla, wow, is on fire, over $1,000 a share. I had my people buy in at 600 a couple of months ago when it dipped down there, so we're doing really good. All right, let's talk a little bit about what's going on. The fiscal flows, actually Friday's flow was very weak, only 12 billion, I'm sorry, but the 10-day average of the fiscal flows are about 23.5 billion. That's not bad. We're going to end up the month of October right around 500 billion, might even be a little bit over, but somewhere near 500 billion. That is decent, okay? That is a decent flow. I was getting a little bit nervous a few weeks back when it looked like maybe it would be in the 300 billion range, but 500 billion is decent. Some of you a couple of weeks ago, you were upset because I said the correction was over, and I didn't say that at the exact bottom of the correction, but had you jump back in and I said the market was going to new highs, it's going to new highs, okay? Look, like the great economist John Maynard Keynes once said, when the facts change, I change my mind. Okay, and the conditions had changed back then. I did not see the flows really cratering like I thought they would. They were stabilizing. And the other thing I said back then was we're going to see bank credit expand. We're going to see loans expand. And that's exactly what is happening, okay? In the week ending October 13th, which is the most recent data that I have from the Fed, it comes out every Friday, loans outstanding were up at the highest level in 8 months. But here's the real kicker, the growth rate of loans, in other words, how quickly banks are initiating loans, that is now at the highest pace, the fastest pace in 18 months. Consumer loans are growing at the fastest pace in 39 months, almost 4 years, okay, 3 years plus. I mean, that is very rapid growth. The growth rate of loans now has recovered to pre-pandemic levels. So I said we're going to see an expansion in bank credit. I said the banks had plenty of capital. They have a record amount of capital, and capital is the only constraint on bank lending. And I said once they start to deal with this problem of excess reserves in the banking system, and as soon as they lifted the debt ceiling, what happened? You started to have a reserve drain. By the way, on that point, the week ending October 13th, which is the data I just gave you, that was actually a week that saw a build in reserve balances. So I suspect when we see the data this Friday, the lending data is going to be even more explosive than what we saw in the week ending October 13th. So that was the thing. I said that the expansion in bank credit, remember, I think I've said this in every video for the last 2 weeks, there's two kinds of money. There's high-powered money, that's the government money, that's when you get a Social Security check or you get an unemployment benefit, or you work for the government, or you're a vendor to the government or something like that. That's a check, that's money in your bank, yours to keep. It doesn't come with an offsetting liability. But there's other kinds of money, that's bank credit. Bank gives you a loan, that's great. You get a deposit in your checking account, but at the same time you have a debt, you have that loan, it's a liability, you have to pay it off, and you have to pay it off with interest. The first kind of money is the best money. And when we saw the fiscal support in the pandemic period when it was massive and they were sending out checks to people and supplementary unemployment benefits and all this other stuff, the demand for bank credit went down because people were flush with cash. We saw that happen we saw personal savings go up to 6 trillion, which is like an unprecedented huge amount. It's down now because they've slowed the fiscal support, and also taxes, suck that away to some extent, but it's still over 2 trillion, which historically is still a huge amount. But since that, it's very interesting because if you go back and I looked at this, when did the contraction in loans bottom out? It bottomed out in March of this year, exactly when we had our biggest 1 month fiscal flow of 984 billion. Remember, I've been talking about that. March was 984 billion. Then it went April, May, June, it was like 750, 720, 700. Then July, August, it was like 600. Now, September, forget what it was in September. It was around 600. Now we're going to be in the 500s. But when that fiscal support started to come down, what happened? Credit demand started to go up. So the private sector, the non-government, starts to replace those fiscal flows with bank money. You see how that works? When the fiscal flows come down, the private sector, the non-government, in order to stay, at the same or relatively equal level, still flush in terms of their financial balances, they start to take on bank credit. It's good for the banks. Ultimately, it loads people up with a lot of debt. But like I said in the past, debt service burdens, in other words, the ability to service that debt, is still at an all-time record low. It may have come up a little bit, but it's still very low. So it's not an onerous burden. It's not something really that's gonna raise a red flag or a yellow flag. I mean, there still could be a long way to go in terms of taking on debt to the point where it becomes difficult. Now, if the Fed raises interest rates next year, that could change the equation somewhat, but I'm not sure that's going to happen. Speaking of the Fed, they are going to taper in November. Their meeting is November 2nd to 3rd. This move has been highly telegraphed. The other thing, and I don't know if I mentioned this, is that a recent survey of bond investors shows that they are the most bearish in history. There has never been a reading as bearish as we see right now towards the bond market. So you have a massive short position, sentiment historically bearish. By the way, the banks over the last 5 weeks have been steady buyers of cash treasuries. They bought 136 billion in treasuries over the last 5 weeks. We don't see the banks unloading treasuries at all. They've been taking on treasuries. It's mostly speculators. It's mostly institutional investors who are short in the futures market. Even dealers who are usually short treasuries because they have inventory, they are net long treasuries. So I'm looking for a big rally in the treasury market. Gold was up today. Bitcoin bounced back a little bit. It pulled back on Friday. It was up a little bit today. What else? The dollar was up a little bit. And so, yeah, the situation, the environment is bullish right now. By the way, it is Monday, so I sent out the new edition of MMT Trader. If you want to get a copy of that, go to my website, pitbulleconomics.com. All the data is in there, my breakdown on what's happening. But basically, yeah, everything that I've been talking about, the expansion in bank credit, that's happening. Fiscal flows have stabilized. Going to keep an eye on that. I don't think there's really anything to worry about until we get close to that December 3rd date. That's when the current debt ceiling, we kind of hit that limit again, and then we're going to be right back into this, political whatever you want to call it, trying to get that thing raised, and it's going to be around the holidays. It could be a mess. But from now until then, I think it's bullish. I think we're going to see Dow 36,000 finally very soon. We'll probably see a new high in the NASDAQ very soon. Then we'll have to worry about what's happening when we get close to December 3rd. That's it for today, folks. Don't forget to like and subscribe. Thank you very much. And go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.